9.21 crore in the preceding financial year. The EBITDA for the year was 123.10 crore as against 104.77 crore in the previous financial year, and the increase of over 17%. The EBITDA margin has also improved from 14.77% to 18.39%. After providing for interest, depreciation, and tax, the profit after tax of the company also grew by 26% from 71.29 crore to 89.64 crore, resulting in earning per share of rupees 37.48 in financial year 23-24. Profit after tax margin has also improved from 10.05% to 13.39%. The PVC pipes and fitting division has achieved a revenue of rupees 409.9 crore as against 422.6 crore in the previous financial year. The division continues to be committed to increase the range of value-added products in its product portfolio. The division continues to focus on expanding distribution network, adding new products to build portfolio depth and strengthening the brand equity. Further, the growth expansion of infrastructure, housing and irrigation sector shall continue to be the driving force for PVC products in the future. The demand from housing, infrastructure and irrigation sector is growing, and good rainfall in most of part of the country also augurs well for the industry. The company remains positive of achieving further volume growth in future. We are entering the next phase of expansion by adding CPVC and UPVC injection molding machines to increase our production capability. Additionally, we are introducing a new product line for HDPE drums, which is crucial for the pharmaceutical, chemical, and food processing industry. The domestic plastic pipes and fitting industry is currently in a growth phase and is expected to achieve double-digit expansion of 10 to 12% by FY25. The sector has been continuously benefiting from budgetary allocations towards schemes like Jal Jeevan Mission and Pradhan Mantri Krishi Sinchai Yojana and Swachh Bharat Abhiyan. Additionally, rising disposable income and emphasis on affordable housing in urban, semi-urban, and rural areas increase demand for durable and cost-effective pipes in industrial sectors, and a strong focus on infrastructure and irrigation projects are poised to further drive demand in the near future. The government has undertaken various pro-growth measures, especially in rural infrastructure and agricultural space, which will increase the demand and consumption for PVC pipes and fittings. The government's continuing focus on various initiatives like Jal Jeevan Mission, Swachh Bharat Abhiyan, sanitation, affordable housing, and smart cities is driving the demand for PVC pipes and fittings. The company continues its focus on high margin value added products like CPVC pipes, fittings, and water storage tanks, which also modulates the brand presence in market. The flexible packaging division has achieved a revenue of rupees 259.4 crore as against 286.7 crore in the previous financial year. The division continues to utilize its capacities optimally and work on value-added products and newer applications for better profitability. The division has added prestigious customers, both domestic and international, and is working on expanding certain capacities to meet their customized demand and exploring more export opportunities for higher margins. In view of the enhanced customer base, both domestically and internationally, the company is now embarking on its next phase of expansion and is poised to position itself as a trusted provider of high quality packaging solutions in the industry. In order to cater the growing demand for extrusion coated and laminated packaging material, the company has successfully commissioned its third extrusion, the coating and laminating line during the current financial year. This high-speed, state-of-the-art machine will provide better efficiencies in execution by debottlenecking as well as enhancing the capacity. The machine is equipped with modern technologies, features that will support in better quality and reduction of consumption of expensive polymers. Looking at the growth demand for value-added solutions such as HSL coating, water-based adhesive lamination, in-register cold seal adhesive, and foil-to-foil basic based lamination, the company has successfully commissioned as Nordmecania Super Combi 5000 laminator. This machine is a multi-process workhorse, giving extreme flexibility to manufacture multiple complex structures. This high-speed, state-of-the-art machine is equipped with modern technologies, features that will support in better quality and will provide better efficiencies in execution by enhancing the capacities and capability for value-added products. We are expanding our capacities to 36,000 metric ton over the next 2 years, focusing on extrusion coated and laminating structure. India is almost the largest and fastest growing flexible packaging markets globally, driven by factors such as population growth, urbanization, improved quality of life, rising hygiene awareness, evolving lifestyles, convenience, and consumerism. The flexible packaging market is projected to grow at a CAGR of 12 to 13% over the next 5 years, with plastics leading the way due to their moisture-resistant properties. Flexible packaging serves a wide range of applications across both food and non-food industries, including ready-to-eat meals, boiling bag pouches, insulation, cosmetics, healthcare, and FMCG sectors. The company is closely working with customers and developing customized solutions to achieve growth in the flexible packaging business. The company is increasing its export business by strengthening its distribution reach in newer international markets. The company continues to focus on development of new applications and value engineering to provide best products with customized solutions to its customers. The increasing investment in the food processing industry is fostering the demand for the flexible packaging. The industries pertaining to essential care, such as packaging for fresh and processed food, medicines, personal care products, and e-commerce, etc., are expected to drive the growth of flexible packaging in the country. Keeping in view the strong financial results for the financial year 24, the Board of Directors have recommended dividend of rupees 1.80 per equity share of rupees 10 each. Now I call upon Sri Jagdish Chandra to further proceed with the notice convening the annual general meeting and the auditor's report. Over to Jagdish.
Since the annual report along with the notice, and we have also received certain questions by mail. So I will try to answer to most of the questions to the best that I can. Um, I will start segment wise, that will give a better clarity. So I will start with the PVC pipes division first. Uh, uh, FY24, the total revenue in the PVC pipes business was around 410 crores. And in FY23, it was 422 crores. Of course, there was a certain reduction in the revenue, though the volume has increased. However, in FY23, the prices of raw material and the prices of the finished goods were at an elevated level because of disturbances in the because of the Ukraine-Russia war and because of different shipping line issues. The raw material costs across the commodity sector were elevated, so which got corrected last year, and thereby the basically the realization was reduced, So that is why the revenue is looking at a lower level. However, the margins were sustained, and in the PVC pipes business, we are maintaining at an EBITDA level to around 21%. And in FY23, we had certain stock or inventory gains. Even last year, we had diluted all our stocks, and we were just working on just-in-time inventory, which really helped us to maintain those margins and to give better results, even at a lower revenue. Talking about the volumes, we will definitely try to share the volumes quarterly and through investor presentations better. As you asked about the volumes in the PVC pipes business in FY23, the volumes were 37,900 tons. And in FY24, the volumes were 41,600 tons. And this year also, we are expecting FY25, we are expecting a growth of 7 to 10% in the volumes. Prices this year have been majorly stable, ranging from 75 rupees per kg to around 90 to 95 rupees per kg. So thereby the prices of the finished good has also been stable this year. We are getting good traction in the fittings, and thereby we have been increasing our range of fittings in both PVC pipes and CPVC pipes in last 2-3 years, and we continue to do so. Fittings are a high value product with a better margin, and we are focusing on enhancing the capacities of our injection molding machines to cater to better demands of the fittings. Definitely, the demand for fittings drive the demand for pipes, and the demand for pipes also derive the demand for fittings. And then we also try to enhance our portfolio by adding water tanks. And water tanks has also supported us in the sales of the entire value chain. And so major focus in this year will also be expansion towards fitting machines, as we have certain capacities in the pipe extrusion, and we still have capacity in water tanks. So injection molding will be our main focus for expansion. Capex will not be too much. It will be somewhere around 5 to 7 crores during the year. And we are expanding at the same location, and we have that locational advantage to cater to the North India market. In the North India market, we are enhancing our presence in our existing states that we are present in. We are not strategically, we are not entering into new states or expanding into new geographies, because our brand presence is strong in this region. And if we plan to go to some other region, there has to be a lot of efforts regarding a new setup, a proper setup of a new plant plus a new marketing strategy. So we are still not focusing on that. We are focusing on our existing market, and we still see a huge potential in the states that we are present in. And we are confident that we will continue to grow at this 7 to 10% growth rate in the existing market that we are present in. Again, volumes, we were requested to state quarter-wise volumes. So quarter-wise in Q1 FY24, the volume sales were 11,500 tons. In Q2 FY24, volumes were 10,300 metric tons. In Q3 FY24, volumes were 10,100 metric tons. And Q4 FY24, volumes were 9,750 metric tons. In the current financial year, in Q1 FY25, volumes were 12,705 metric tons. And we expect the momentum will continue in this year. Margins, as I said, EBITDA level margins are somewhere around 21%. We expect it to be somewhere around this level only, 20 to 21%. We are able to maintain this margin because we are not going extremely aggressively. We are not doing government projects or even private projects where we have to cut down on the margin, and we have stringently and strategically focused on sales through the distribution network, where we are able to maintain these margins, and we are conservative in this, and we would want to stick to this strategy. Again, the payment cycle is also quite fast in selling through the distribution network as compared to selling in the government sales or projects. So we would want to maintain in this strategy that we are following. There is a huge surplus that we have, and the surplus is being accumulated mainly because of the PVC pipes business. The capex is very marginal, and the returns are higher. We plan to create a treasury, and thereby we want to retain that treasury to address any future circumstances, or maybe even think of organic or inorganic growth in the future. So we are wanting to create a substantial treasury in the company, thereby securing the company from any adverse circumstances or any major external or internal factor that might come. That is also helping us to create a passive income in the company, and which will in the long term definitely help us to take certain strategic decisions as and when some opportunity comes. Talking about the flexible packaging business, it's been almost 6 years now that we have started with the flexible packaging. Our initial 5 years were majorly focused on creating a base of brand owners and customers, and to create the systems and processes towards supply chain, towards the production processes, or even attaining the quality parameters, and even to give a good customer service. And we have created a certain scale in these years to address all these things and to bring up this business to a certain scale. Now we can say in last year, in FY24, our focus was to consolidate all our efforts, and thereby we became selective in the kind of customer base that we had. We initiated or undertook a lot of cost optimization measures, and thereby the volumes were little affected because of that. And similar to PVC pipes, over here as well, the realization had gone down in FY24 as compared to FY23, because the overall commodity cycle had normalized last year as compared to FY23. So thereby we see a minor reduction in volumes, and the per sale realization had also come down. Talking about the volumes, in FY23, our sales was 12,900 metric tons, and in FY24, it was 12,050 metric tons. Q1 FY24 was 3,025 metric tons. Q2 FY24 was 3,120 metric tons. Q3 FY24 was 3,000 metric tons, and Q4 FY24 was 2,900 metric tons. In the current financial year, Q1 FY25, the sales volume were 3,700 metric tons. This year, as we added certain machinery, we thereby debottlenecked certain processes, and by that debottlenecking, we are able to increase our outputs, and hence the performance this year will be better as compared to FY24. We expect organic growth in this business with the existing customer base that we have created over last 6 years. Through these customers only, we expect to increase the volumes and increase the business. We have taken certain measures to improve our margins. With a certain scale, with a certain volume, we are able to better negotiate with our vendors on the pricing and on the supply terms. We are improving our efficiencies in the production processes by implementing certain changes in our boilers, in our thermic line, shifting from a gas-based fuel to a biomass-based fuel. And even in biomass fuel, from, say, a certain expensive biomass-based fuel to a more optimized biomass fuel. So, which is bringing in a lot of cost savings and efficiencies in the process. Our payment cycle has also improved from our customers because the customer base has stabilized. We are able to provide better turnaround to our customers as flexible packaging is a highly customized business, and where each SKU is highly customized for that specific customer. And since we have an established base of customer, we know what kind of material they require. So we are able to provide a better planning, better forecasting for production, and thereby a faster turnaround to our customers. Over here, with all the measures that we have taken last year and this year, we expect definitely the margins have improved in FY24. We expect the margins to still improve in the current financial year. However, it will not be as high as what we see in our PVC pipes business, but it will be somewhere around 10 to 12% on an EBITDA level that we have seen, and we will continue to maintain that. And we are also focusing on certain value-added jobs such as cold seal and foil to foil based structures that provide better margins. So that will support our overall performance. If we talk about the geographies where we are present, we are supplying pan-India in the flexible packaging business. We are also exporting to certain Middle East customers and to one or two European customers. And our export will be somewhere around 10 to 15% of the revenues. We are focused to increase that. We have taken a target of taking it to somewhere around 20 to 25% over the next 2 years, and we are aligning our systems accordingly. Talking about the capex, we have certain space for expansion in the current plant, and over the next 2 years, we will be filling up the spaces and we will be adding more capacities in the flexible packaging. And that will happen organically, looking at the demand cycle and the demand from the customers. So we plan to add 2 more production lines in the existing plant. So thereby this will enhance our capacity from 19,200 metric tons per annum to somewhere around 35 or 36,000 metric tons per annum. Capex will be somewhere around 40 to 45 crores in this over the next 2 years. all in all, we can say that on a consolidated level, we will be somewhere around 16 to 17% on the EBITDA level, and the treasury that we have, that will also add additional margins, additional profitability. So that will really support as a passive income source for the. Uh, as on date, as on 30th June, the promoter holding is around 44.27%. There is no share pledging. As we had committed, we were on the journey to reduce and make the share pledging zero, which we have done, and we intend to maintain that. uh, uh, we are very conservative as a whole. We are very conservative in utilizing our surpluses, and we want to really create that treasury and to look for opportunities in the future where we can see more areas of high growth and performance. With that, I would like all the shareholders. I would like to thank all the shareholders. Back to you, Jagdish.